wanted to discuss a little bit about federal disaster assistance programs. I'm not with FSA, I'm with California Cattlemen's Association, but I might give you a little bit more of a unique perspective on some of the programs. If you have specific questions, please go directly to your FSA county office, and hopefully I can talk more outside of just the eligibility requirements of the program and talk a little bit about sort of how the programs are used, sort of what the future of the programs are, and what we can do to potentially make them better. Because at the end of the day, it then comes to us to try to go back to Washington to make those policy changes. So real quickly, I'm just going to run through some of these. I don't plan on reading them all. Everybody is probably familiar with NAP. It is the Non-Insured Crop Disaster Assistance Program. The NAP program is something that is not a Farm Bill program, so any person that you've heard that said that you've received a NAP, a delay in your NAP payment because there hasn't been a Farm Bill, they're wrong. And so there are some eligibility requirements associated with NAP. Your non-farm income, there is a fee that's involved, but it does include drought. And so far since the last 2 years, NAP has probably been the primary disaster assistance or drought assistance program people have used in the absence of the Livestock Forage program, which has to do with the absence of a Farm Bill. So that being said, it is eligible for native feed and pasture. You're covered based on a grazing season that's established. I'll go into a little bit about sort of some changes that happened this year, essentially as part of some things that happened between the state office and the Washington office on how grazing seasons were set and how payments were made in the past. I'm not certainly going to get into a whole bunch of details, but counties had set different seasons to end earlier in the year, which means payments were available early in the year. And there was an issue this year that stopped that. Everything went back to the calendar year. And so folks are now just receiving payments for 2012, 2013. For those that have received their 2012 payments, again, they're now making payments for 2013. One of the things that is I know can be a frustration to some is that it requires at least 2 documented independent experts to provide that a loss of over 50% is actually accrued. And I think for most counties that I've talked to, that certainly has been much easier to do. For other counties, it's been harder to do. I think that really depends on where you are and the resources you have available. And then of course, what the conditions look like on the ground. In a year like this, or the end of the year last year, I think it's very easy to say that there's over 50% loss. But that being said, I know that a couple of counties have expressed some frustration in trying to get that put together so it can be submitted to the county and then to the state to demonstrate that loss actually occurred. So kind of where we're going with this from a policy perspective, we heard a lot from folks this year that they were very, very frustrated with the fact that they expected their NAP payments for 2013 to come in October, November, and why they weren't getting paid, and there were a whole bunch of stuff associated with that. But for those that had this grazing season that had ended earlier in the year, that was not for all counties, but the ones that had changed their grazing season to do that. Again, this issue that took place between the Washington and the state office within an audit, where that was basically told, California, you need to cease and desist, can't make these payments anymore. You have to do them at the end of the calendar year. We're going to try to go back and change that. We've heard a lot of very similar, I think, concerns, and at the end of the day, we've heard from our producers that bottom line, we want to get paid earlier in the year. We want to be more competitive. We want to have that money when we can actually go out and buy hay. Doesn't do us any good to get the money in January when there's no hay that's available. Definitely understand that. There are some issues here that we have to work through. Some of them have to do with the fact that when you're paying into the NAP program, you're actually eligible for other Farm Bill disaster programs, and so we don't want to limit that. But in terms of trying to get payments to you earlier rather than later, that's something that we are going to work on with our state office here, FSA state office, as well with the Washington office, and we've been in direct contact with them. And Senator Feinstein's office is actually now involved in that effort. She actually sent a letter to Secretary Vilsack about 2 weeks ago on behalf of CCA, basically requesting that the Secretary outline every reason why there was this this disruption in earlier payments for those grazing seasons that have been changed, and what we can do to actually rectify that. ELP is another one folks have used to consolidate their loan programs, especially for losses. I know that with the drought, it not only causes loss in production, but then your banker starts wondering, how are you going to be able to renew your loan based on what your projections were. That's something that I know some folks have used. I want to spend a little bit more time on the Livestock Forage program. This is a farm bill program, and I can tell you today, I guess there's lots of good news today, right? So, number one, it's raining outside, which means everybody will be optimistic that heifers will be $3,000 a piece tomorrow at Red Cliff. And the drought's, of course, over. But the farm bill got passed today. So the House voted on the farm bill. Yeah. I'm not going to comment from CCA's perspective because there were some major problems with the farm bill. But that being said, it is what it is. The farm bill got passed. It got out of the House today with a vote of 251 to 166, so it cleared a margin of about 30 votes. And it's very likely to pass out of the Senate later this week. Always the concern was what was going to happen in the House. It's always of concern to leadership when you have people like George Miller from the East Bay and Tom McClintock from Northern California working together to defeat a farm bill. Nevertheless, they got the votes, so it's on to the Senate, and we expect the president to probably sign it sometime next week. So, this was a slide that I made prior to getting the conference report last night, which is 949 pages long, and I spent a couple of hours trying to go through it last night so I could prepare for this meeting today to kind of tell you what was in there for this Livestock Forage program. Livestock Forage program, the name is exactly the same. There's a lot of questions. We've heard from the negotiators of the Farm Bill that it was going to be retroactive for the last 2 years that we didn't have the Farm Bill, which would be the 2012-2013 year. And then what were the eligibility requirements that were going to be associated with that? And I didn't come today with a new presentation because most of the things that are on this slide, and this is all based off the 2008 Farm Bill, are relatively the same, at least from what I can read. And I would ask you not to hold that against me. Again, I read the thing last night at 10:30. It's 949 pages long, quite extensive. It's going to take us a while to digest this, but in the interest of sharing information, I wanted to make sure I got this out to folks because I know there's a lot of questions about Farm Bill programs. So, from what I can tell, it is retroactive for both the 2012 and 2013 fiscal year. You do have to be enrolled in the NAP program, have some sort of order of risk management coverage in order to be eligible for LFP. So not everybody is going to be eligible for LFP. That was a change that was made back in 2007, I believe, and that change is standing today. There is a non-farm income. You can't exceed $500,000. And then, of course, there's the payments not to exceed $100,000 in any one calendar year. I did not have the opportunity to go through and determine whether or not that would be for 2012, 2013, or if you're getting paid in one lump sum for 2012 and 2013, if you would basically be limited on your LFP payment because those payments would be made together. I think that's an issue that we're going to have to do a little more research on. And then payments are, of course, made with the U.S. Drought Monitor. And I know there's some frustration on how the Drought Monitor is reflective of California and at what severity the drought is described. That's administered by the University of Nebraska in Lincoln. But what's sort of confusing about all these programs is you got NAP, which is sort of the foundation. You have to be in the NAP program if you want to do LFP. And the NAP assessment is based on something completely different. And then in order to be part of LFP, you're then basing that on this U.S. Drought Monitor, which essentially will provide the severity level, and then you're paid for off of what that severity level is. And that will come out. The U.S. Drought Monitor maps have not been released for the Livestock Forage program for 2012 and 2013. There was really no reason to because it was a farm bill. The funding wasn't there to do it, so we expect those to come out, I imagine, at some point. I haven't seen them if they're available, and you guys may know otherwise, but they're not, we haven't seen them. So I would imagine that once the Farm Bill is passed and signed, and as the agencies go through actually providing that information, we'll have an opportunity to look and see. And frankly, based on the way the drought monitor has looked in the past, I don't know if there's actually going to be people are going to be eligible for payments in 2012. So we'll just have to we'll have to see what that looks like. I can tell you California was not eligible in 2011. So payments made monthly per animal unit up to 60% of the actual feed costs, that's remained the same. Again, coming up with an equation of what you're paid per animal per month, that's going to be worked out. I did see in there last night that they are calculating 15.7 pounds of corn per day per cow multiplied by the average price of corn as your planted grain crop to offset to come up with the equation of what you're paid. Yeah.
Don't you have to sign up for NAP, 1st of December?
Depends on your grazing season.
Okay.
That's the sales closing day, correct?
What's that?
1st of December. Yeah.
And the county committee, may I jump in? I'm sorry. And the county committee can look at it 30 days after that sales closing day to see if we can accept it later. Excuse me.
Okay.
Billy, go ahead and introduce yourself so people know.
I'm Billy Merritt. I'm the County Executive Director for FSA in Butte County, and Justin's doing a great job. Didn't mean to interrupt him, but I am here for questions if you have some. Like Justin, we're kind of waiting to see the official Farm Bill and regs. Thank you, Justin.
There was, I can mention one other thing on LFP. It specifically says in there the Secretary is allowed to spend whatever monies he has available to pay for the needs of the LFP program. So it's not like there's $2 billion in LFP for the next 5 years, and once that money's gone, it's gone. So in some of the programs, they are capped at a certain dollar amount, and he can only use so much, but that's not the case with LFP, so which is the case it was in 2008 as well.
When can we start applying, if we're in the NAP, when can we start applying for LFP for this year?
I have no idea. So one of the things we've been very good at, and I've gotten to know Val Dulcini, who is his boss back here, and very well, and you know, he picks up the phone now, and my number's I think on his caller ID, but partly that's because I've probably been a little bit of his pain in the ass, and I would apologize to him for that, but you know, we've been really on him about trying, and it's not his responsibility or his fault. He's obviously got to go through a layer of bureaucracy in order to get that done, but we're kind of trying to use Val as sort of our advocate out here in California, and we're directly communicating with the administrator of the NAP program in the Washington office, and that's part of the reason why I think we were able to get some good information out to folks about when NAP payments were going to be made for last year. But we expect the same thing here. I mean, I can tell you, as soon as the Farm Bill is done, the deal's signed, it's ready to go. We're going to be talking about how we're going to get this done and when people are going to get paid. So we got some things to work out, but I have no idea when that's going to be. So, yeah.
Justin, I think you kind of touched on this in the beginning, and I want to see if I understand this correctly. The qualification for LFP is made on the rainfall amount, not forest production, correct? So if it rains 15 inches tomorrow, we could go down a class and not be in a drought anymore, but we all know that we have no feed anyway, right? So am I assuming this a little correct, or am I thinking about it wrong?
There's a lot to what goes into the U.S. Drought Monitor, but yes, there are, and I'm not an expert on the Drought Monitor, but there is precipitation is part of that equation. And unlike the assessments that are made for NAP, where it's based on actual production loss. So yeah, I know there's a lot of frustration with the U.S. Drought Monitor. I guess if there's anything that we can take back as an association that we can help, I know the folks at FSA, I think in most cases, want to help you guys too. You know, we've got to go and ask for those policy changes. And so we need to know what those policy changes are. But I'll be very honest with everybody in this room. No one seems to like the U.S. Drought Monitor. So then and everybody hates the fact that NAP is paid on one scale and LFP is paid over here on this other scale. But then if I went and asked everybody, well, let's just defer to NAP, I guarantee there's going to be people in this room that are going to say, well, we don't like the way NAP is assessed either because we can't get two people to do it. So I mean, this whole issue needs to be solved. I don't have the answer, and we've got to work together as a team, I think, in the long term to try to figure that out. I mean, I can tell you from our perspective, and just me personally, as a staff member at CCA trying to work on these issues, it's a huge pain in the butt to have NAP assessed over here on one program and then have LFP over here on another. So, if we can find a way to combine that and make that more efficient, I think that would be great. But I think there's going to have to be some give and take in terms of, personally, my personal opinion is the U.S. Drought Monitor would probably be the way to go for both. But we need to make sufficient changes to the U.S. Drought Monitor to ensure that we're correctly representing California in terms of what our drought and what our rainfall looks like. So, because you're right, there are issues there. And I know that Glenn had talked. I had sent some of that stuff over to the University of Nebraska, and up to where we are currently with the last map that came out. And I don't know, Glenn, maybe you could touch on that, on whether or not that was helpful or not.
There's 17 things that go into it. Precipitation's one. They use satellite reflectance as a major one. But remember, Nebraska's perennial grasslands and we're annual. So they're trying to figure out our system. I think it's incumbent on all of us. We complain about it. I've asked your farm advisors to provide data. They have asked us for monitors to provide data to make sure they're getting it right. So as we're all complaining about it, we can't get our hands around it, but we need to solve it. So their reflectance from a satellite may or may not work as well on annuals. So we need anybody that's clipping forage on a regular basis needs to get their data in, and they will accept it.
That was a very excellent summary of what I was just trying to say. Anyways, no, I mean, there are definitely issues with the drought monitor. We need to fix those issues. We are happy to do it. I'm happy to go talk to our National Cattlemen's Beef Association and have them help us do it. We need to know what those are, though. So, and that needs to come from a lot of the university folks, I think. So maybe we can have some more pointed discussions about the drought monitor and what we might be able to offer. Maybe we can open that door and try to get that information in there and start working on that now. Yes, ma'am.
So you belong to NAP and you're going to qualify for livestock forage. You won't be paid out of those programs, do you?
Yeah. But again, just because you qualify for NAP, you're eligible for LFP, but that doesn't mean that you're going to be paid for LFP. Again, LFP is assessed on the drought monitor. So if you were eligible for NAP in 2012, I have no idea what it's going to look like once the U.S. Drought Monitor determines what the LFP payments are going to look like for 2012. So I can't guarantee you that you're going to get a payment from LFP for 2012, but you may, and you can get both payments, absolutely.
So if you do qualify for both,
Yeah.
you get both payments.
Absolutely. This is another big one that folks have asked about, especially to our office, and I know others as well. Glenn's taken a lot of questions on this, is how does capital gains tax deferment process works. There's actually two sections of the Federal Internal Revenue Service tax code that talks about deferments that can be made for sale of excess livestock solely due to disaster and drought. And what I mean by that is basically in capital gains that would have been incurred associated with the sale of cattle in excess of what your normal business practices would be. There have been some questions that have come up about, is there a cap on this? We can't find anywhere in the code. I can't find anywhere in the code. I can't find anywhere in regulations where it's defined that there is a cap, and I've checked with folks back in Washington as well. So for those of you that are asking if there's a cap, I don't believe it's there. So, and I trust the folks that I've talked to that have told me it's not there to tell you there's not a cap. In terms of the other thing that's a little bit ambiguous is, what does it mean to be in the principal business of agriculture? That again is not defined in the code, and I think you probably should have a conversation with your accountant and your tax attorney or your tax advisor about this in a little more detail. The way typically these things are defined in federal law is that 51% of your income or more is derived from production agriculture. But again, I don't have a solid definition that I can pull out of the IRS code and say, here you go, this is what you can tell your attorney or your advisor, and they can, feel great about, having a definition from the federal government. So, but that being said, Those are the two eligibility requirements. There's two ways that you can defer your capital gains. One is under Section 1033E, and that is postpone capital gains with the intent to purchase livestock within 2 years of the end of that tax year. And that is essentially a deferment with the opportunity to keep that money with your intention to buy a cattle back. The second option is under 451E, and that is just deferring any capital gains assessed from drought, just deferring that to the next tax year. So both options provide the ability to defer your capital gains, but they provide essentially two different avenues on how to do it. Does anybody have any questions about that? Yes, sir.
Can you repeat the question?
Oh. What eligibility do you have? I believe you just have to be declared a disaster area. And what's that? No, it's not the Ag Commissioner. I believe it's a USDA. The governor declares a disaster area, the counties declare disaster areas, USDA secretary declares disaster areas, and the president declares disaster areas. Oh no, by the way, FEMA does too, so it's very confusing on which we should be looking at. But I believe it's just you have to be declared a disaster area during that year, and that's been made for all the counties that I know here. There were some questions about primary disaster areas for Tehama, Lassen, Butte. Okay, so there was something that came out on the 14th. People were concerned it didn't include all the counties in Northern California. I can tell you as of 3 days ago, all were included. So, Glenn, you had a statement, question?
One thing is IRS every September will publish those counties that are eligible for this deferment. So your tax accountant or you need to go look at that. Then you know whether you're eligible to take this deferment by IRS standard.
Right. And again, I believe that's based off of those areas that have been declared primary disaster for drought by the secretary. And I guess that's all I got, according to my slides. Yeah, Tim.
Just a question about the years that you're allowed to defer the capital gains tax. I had a rancher in my area that mentioned that he heard from his accountant that he had 4 years to rebuy cattle.
You know, I saw that too, and I was kind of questioning myself on that, and we have been, I've got some inquiries in as well. I think part of that has to do, I've heard 2 years, but I've also heard the following tax year after the drought has ended, and I believe that's the way, it actually is written in code. So that being said, it would be longer than 2 years, but there are publications out there, including one I found on the IRS that does list it at 2 years. So without that conditioning there for drought.
Well, I think your comment on seek the professional advice of your CPA is perfect.
Yes, sir.
First, Justin, thank you for your interest in our programs and trying to do something to fit it for our producers. That's very important that everybody be involved. And we're not sure what the requirements are going to be for LFP until we get the whole farm bill, because there's no way you can go back now and buy NAP for 12 and 13. But in the past, there's either been a buy-in where you could pay $100, that would qualify you for these programs, or if it could be waived. We can't go back and buy insurance 2 years ago. But I encourage all of you, and we have some forms to sign up for our electronic emails so you'll know what our programs are. We can no longer afford to send hard copies through the mail, but please sign up so we can keep you apprised of all the developments of these new programs, and feel free to visit your local FSA office. We also have micro loans, which is a low doc loan, to tide you over during these hard times. But please visit our offices. We'll keep you apprised of what's going on, and we'll steer you to our farm loan people. Thanks.
Yeah, if I could make one comment on that. My comment on LFP earlier, a great point. In terms of discussing NAP requirements under the new LFP program, that was based solely on the rule changes that occurred in 2007. I will tell you, when I looked through the statute last night, I didn't see any risk management or NAP requirement in LFP. Now, I don't want to tell people that that's the way it is, but I didn't see any specific language in the statute in the Farm Bill last night that passed out of the House. It'll be the same Farm Bill that has to pass out of the Senate. But again, the only way for that to be clear, for me to tell you 100%, I think you're 100% for your FSA office, is until the Farm Bill's done and USDA FSA can get a good chance to go through it and look at the details.
There's an Act 2 in here I wanted to read out, and I'll just skip right into that
Okay.
response, but you want to repeat it for him too. The first one is the income eligibility limit still $2 million for AGI?
AGI. Oh, adjusted gross income.
Yeah.
For
I think it
That's nice.
for this.
The LFP.
So the question was, go ahead. Let me repeat the question real quick, and I'll repeat the answer. The question was, is it $2 million your upper limit income, and you're sure it was for LFP? Okay.
Yeah, our adjusted gross income for the 2002 Farm Bill was $2.5 million or less to be eligible. It was different programs have different adjusted gross income eligibility requirements, and it'd be very interesting to see what those requirements will be for the new Farm Bill and the specific programs.
Again, last night when I looked through the statute, and again, I should have brought it with me today, and I apologize I didn't, but I'm almost sure it was back to the $500,000 non-farm income. So I think it's going to be consistent with what it was in 2008.
Then the second one here is, are the payments for LFP based on per head or per acre?
It's based on per head.
Last year it was the lesser of the two.
Right. It was based on
It's the lesser of the two. You do the figuration with the head, and then you do the figuration with the acres, and the lesser of the two.
Oh yeah. I'm sorry. It's per head, but then also it's essentially a supplemental. What your supplement? It is to cover your what your feed supplement bill would be, up to 60% of that.
Two questions. Is the Farm Bill renewed for 5 years? One.
Yes.
And second question, I saw something on my DPN recently about a movement to move agriculture away from cash-based accounting to accrual accounting, which would pertain to one of those. Any word on cash-basis accounting?
Right. So
Summarize that into that microphone on it, please.
So the question.
Yeah, take that away from the mouth.
The question
there you go.
the question was whether or not the Farm Bill will be a Farm Bill for 5 years. I can answer that yes. The other question was, it sounds like there have been some changes put forward by Congress to look at the cash accounting versus the accrual method. And I first want to go back or answer that. Oh, I'm on the wrong one. I believe I'll have to go back and look at my slides. I apologize. I believe it's the 1033E requires a cash accounting in order to use that mechanism.
I'll address it later on. This is so important, we need to go over it twice, so we're gonna go over it twice.
That's fine. And then, again, they have to get it on my slides. In terms of the proposals that have been made, I can tell you that we have a lot of concerns about those proposals, but I can also tell you that those proposals have not been made in any sort of sufficient form in front of the Congress. So there have been a lot of emails and a lot of stuff floating around out there about how this stuff is going to be going to the president's desk tomorrow. I can tell you that's not true. So we don't need to get all worked up about it. That being said, we definitely need to watch it. We've already sent comments in on it, how we certainly don't. We're concerned about that approach. I highly doubt anything like that would get out of the House, especially if it came from a Republican who probably receive immediate pushback from a lot of groups like NCBA.